I ain't gonna sugarcoat it. The past couple months has been extremely shit for us crypto investors. 2025 in general has not been the year we expected it to be for our coins so far. And it's easy for those who exited at points last year or early this year to say they knew this was coming or it was obvious in hindsight, and to switch and almost hope for a bear market as they have no skin in the game. But I disagree. The extent of the damage which has been seen, alongside the lackluster performance of 95% of the coins, this has been a blindside by the big players and macro factors. I'll explain exactly how in this video. What's up people, I hope you're all doing well. We've had yet another volatile week in this space. A quick market update video today where we look at the charts for the big coins, some other interesting indicators, macro and fundamental analysis, and then also what I'm thinking and doing and whether you should be doing the same. As always, whilst I am a financial advisor, none of this is financial advice. So the best place to start for the markets is of course Bitcoin. In the last week, we have seen it fall out of the 92 to 100k range that is sat in for about 3 months, and the fall has been quite aggressive. We didn't get a relief rally or relief bounce or anything like that. It was just straight days of huge red candles. We dropped around 30% from the highs in January, going as low as 78k, and we are currently in this no man's land kind of area of mid 80s, where a move to the upside or back down is kind of unpredictable. Just looking at the liquidations chart, we can see how much was wiped off the markets in the last week. Multi-billions of dollars worth, obscene amounts every day, which is exactly what the market manipulators want. Remember, they don't want us to make money. Not everyone can get rich, or everyone would be rich. The game we are playing isn't in our favor, so we've got to have ridiculous endurance and have to work hard to ensure that we win. The daily candle on Friday was interesting. We can see we went below 80k, as low as 78, but Bitcoin's strength on the day was pretty impressive. We didn't stay there for long and we're back around the 85k region. In the past few weeks, I have been mentioning this 70/72k region for Bitcoin as a potential target. I said it was unlikely. However, of course, in the last week, it has become increasingly likely. I can still see it happening, although whether it's a quick wick down or consolidation, I don't know. Quick break to ask, why are you not in my Discord? It's 100% free, no questions asked. By being inside, you significantly increase your chances of making mega money this cycle. Nothing more to say, link is down below, I'll see you inside. A lot of people have been mentioning the CME gap for Bitcoin too. We didn't fill it completely in the recent move down, so again, this implies more pain is yet to come. This would make sense, shake out more weak hands and fill the gap. However, it is worth noting that CME gaps do not have to be filled, especially if this is what everyone is expecting. If the majority are thinking this way, then don't be shocked if we reverse instead. The weekly chart further shows the severity of this crash, although a good chunk of it has been eaten up already. If we close below the 25 EMA, we could be in for a few more weeks of pain, just something to keep in mind. So what caused this huge pullback in the markets, and should we be worried? Due to the timing, a lot of people were blaming this on the Bybit hack. I absolutely don't think this was the case, as Ethereum and Bitcoin recovered within 24 hours of the news. The largest attributor I can put towards this is the further developments in Trump's tariff wars. We've had more news coming out this week that China, Mexico and Canada tariffs will begin in March. Also, the EU may be hit with the 25% tariff too. Naturally, in the short term, this is going to cause market volatility and investor uncertainty. Combine this with how the large market makers have been subduing, pumping, dumping Bitcoin this whole cycle, and there are your two major factors. We can see that reaction in the S&P 500. After a great start to the year and hitting new highs, we dropped 4 to 5%. Naturally, being a risk asset, Bitcoin was closely linked and followed the drop down. This is further solidified by the increase in dollar strength that we'll touch on soon, as investors look to reduce the risk and play more so capital protection and defensive than growth. So the fundamental question is, should we be concerned? Is the cycle over? Was this a Bitcoin only cycle? Did we already have our alt seasons in March and November of 2024? I don't think so. I see people panicking over the drop, throwing in the towel, but I just wanted to illustrate a point. Using the most recent cycle in 2021, we can see numerous times throughout the year where Bitcoin dipped hard. These are just rough numbers, but we got minus 27%, 29, 26, 20, 27, 48, 30%, minus 25%. It really wasn't an easy cycle last time around, contrary to popular belief. And this time around, it will be even harder. However, these pullbacks are to be expected. We just had a new president come in, we've had uncertain political and economic climates, we've got market manipulation at its finest playing its part, killing leverage traders and subduing prices. So right now this is nothing to worry about, However, should we begin to close and consolidate below 70k, that for me would be cause for concern, and we would have to begin to maybe accept that this cycle is over, or at least that the top is in, and the best we could get is a new lower high. Something I mentioned previously and has been an ongoing discussion in my server has been whether this cycle will be like 2021 or 2017 or its own thing. I like the saying, history doesn't repeat itself, but it often rhymes, and that could be what's happening here. If we take this comparison for Bitcoin in previous years and compare this to 2 cycles ago, 2013 to 2017, I mean, just take a look at this chart. It is eerily similar, right? We're even dipping around the exact same time we did 8 years ago. I was previously convinced of the double top or 2 alt seasons just like last cycle, but I don't know. What if instead we chop and grind higher for a few months before it culminates in a final explosive alt season in Q4? Of course, this is all speculation and we could deviate. Bitcoin may not be a reliable indicator for alts anymore as it's got the adoption and stuff, but this is interesting data to me regardless. So many people this entire cycle have been calling for 2021 similarities that a 2017-esque cycle could still take many by surprise. Moving on to Ethereum, I have been a little concerned with the price action regarding this coin. We have broken out and under the descending wedge, which isn't ideal, and I didn't believe we'd see us going close to the wick a few weeks back again, but we managed to go a little further down. Where we are right now isn't too bad as long as we don't continue to close further down and start filling these wicks. Interestingly, for ETH BTC, it's not as weak as I would have expected given the significant drop of Bitcoin. Ethereum held up relatively okay, and it still isn't as bad as we saw in early Feb, but we are at December 20 lows again, which is shit. March should be an interesting month where we hope to see a reversal here somewhat, and a recovery in altcoins. The general market sentiment is a little confusing. The fear and greed index showed us at maximum fear levels last week, the kind we haven't seen in a few years since summer 2022. We all know the whole be greedy when others are fearful saying, but I don't think I've ever seen such a juxtaposition between retail and institutes. Retail are running scared, calling the cycle over, selling their bags, whereas we continue to get bullish developments within the crypto space. Huge news in the last week has been the SEC dropping their investigations into big exchanges like Coinbase and Robinhood, showing a warm approach to the sector and increasing adoption. Citadel have decided that they want to enter the crypto game and want to make markets for crypto trading, and the CME group are wanting to launch futures trading on Solana, which strengthens the whole Sol ETF noise at some point later this year. Like, all of these are significant pieces of information from massive players in DeFi and TradFi, yet the bias is all towards negative news, not the positive articles that we're seeing. Something which I found interesting was the difference in pump funds activity of late, which even in stark periods last year, the trenches were always filled. Both the figures and the sentiment that I'm seeing from socials indicates a serious decline in activity. Could this be a sign that when we do recover, we finally get utility season? More people seem to be getting tired of getting rugged and manipulated by insiders on Solana and Pump Fund. Speaking of Sol, I mentioned in my previous video that we could go into the 120, 130 region, and that's exactly what happened, getting to 125. It's a great buy opportunity for Solana at these levels. We've recovered slightly after Binance and Wintermeat decided to continuously dump the Solana supply to try and front run the impending unlocks, but if we do revisit these levels below, I wouldn't be surprised. Covering the macro indicators which I've been mentioning recently, it does seem as though we have had a reversal on global liquidity like I pointed out a couple weeks back. Hopefully this slight dip isn't significant, but there is a lag between global liquidity increasing and the price of Bitcoin increasing, but it bodes well for the next few months as Bitcoin will try and catch up to the trend. Looking at global M2 liquidity, which is slightly different to the previous indicator, whereby this focuses more so on the money available in the top 5 economies for spending and investment. Again, this has been on an uptrend in 2025 with a perceived lag effect on Bitcoin. I think both of these indicators illustrate quite nicely that liquidity is on the rise around the globe, and therefore it's only a matter of time before that liquidity finds itself in the crypto markets. Truflation is showing that we have come down quite significantly in the last month. They got inflation at 1.46%. Ironically, I don't think this figure here is accurate, it seems a bit too low, but the overarching story of inflation decreasing seems to be correct, an improvement on the previous figures. Therefore, we can see the markets are beginning to price in more rate cuts. Before, it was only one rate cut for all of 2025, expected in the summer, but maybe with the release of more data, the government is beginning to realize they can afford to do more. Or perhaps it's the opposite. they believe more rate cuts are required to stimulate the economy to the levels they think are appropriate. Regardless of what the reason is, the more the merrier, for 2025 that is. Just stimulate the economy enough, end QT, get more people gambling on crypto again so we can take our profits and de-risk. The FOMC meeting later this month, whilst I don't expect anything special to happen, I'm more hopeful of a pleasant surprise from the Fed. The dollar has naturally seen an increase whilst money flowed out of risk assets, nothing to be concerned with for the time being, still pretty far off the region I'd like to see the drop down to, but with the previously mentioned macro factors under consideration, this could start to drop soon enough. Remember, Trump wants a weaker dollar to reduce the debt, but also allow the markets to flourish, so he'll continuously advocate for this. So back to the therapy couch for a brief chat. You've probably seen a lot of bearish posting across YouTube and Twitter. I don't blame you if it's playing on your mind, especially if this is your first cycle. You might be terrified to look at your portfolio. My advice to that is pretty simple. Don't look at it. It ain't gonna randomly jump up in a day or two, especially in these conditions. And even if it does, it could come back down again just as fast. If you can't handle it, then don't look, because the last thing you want to do is make a spur of the moment emotional decision. Remember, if you did things the right way, there was a reason you invested in certain projects. As long as those reasons don't change, you're good. You just got to ride it out and wait for market recovery. Take regular breaks, preoccupy your mind, educate yourself, read books, do whatever it takes to keep your mind off it, because I know it can be extremely draining on your mental health in these times. Feel free to have a chat with me if you want. I answer all my DMs, and a rational conversation may be what you need. Instinctively, I want to say that alts have bottomed, or at least are very close to the bottom. What does this mean if you have spare cash and were waiting to buy? It means buy. Timing the bottom is very difficult to perfect, near on impossible. So ask yourself a very different question. Intrinsically, is what you want to buy undervalued? Keep it simple. If yes, buy some. If no, then avoid. For example, BitTensor, the leading AI coin in crypto, currently $335, $2.8 billion market cap, down over 50% from its all-time high. Is it undervalued? Yes, it is. So it's a good buy. Once the market recovers, you won't care whether you bought at 300, 330, 380, whatever. Another example is anyone down 75% from its previous highs, undervalued at 40 cents for the biggest anonymity layer in the world. Yes. So is it a good buy? Yes. If you are thinking short term, this channel and my strategies won't be suitable for you 90% of the time. Some short-term trades get put in my Discord. Members can do a 5 to 10x in a few days and weeks. That's cool. But I zoom out, medium to long term, hence why I label myself as an investor, not a trader. But yeah, I am going to be deploying some of my cash into a few coins. Anyone is on the list. I've been buying Ethereum. Been saying for a while I expect it to pump, so thought it's best to put my money where my mouth is. But overall, in these pullbacks, majority will be down depending on where they entered the markets. We knew the risks we were taking on. Crypto is not supposed to be easy. It ain't supposed to be smooth sailing. Whoever told you that needs a slap. This is quite literally the riskiest asset class out there for a reason. Some people need to accept the reality, but there's a reason why the reward supersedes any other asset class too. This is a generational wealth opportunity. Worst possible case is your portfolio goes to zero, which shouldn't happen if you're holding strong fundamental coins, but even if it does, we'll get up and we'll go again. You only lose when you stop working. Focus on the correct mindset and the results will follow. But anyway guys, that's the video wrapped up. I hope you enjoyed. If you did, feel free to leave a like and subscribe. Also join the Discord, it's completely free, and I'll catch you all in the next one. Take care.